Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Thursday, August the 31st, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. Wait for the market to show us what it's doing once the RTH session opens up, and then execute the plan that best suits the market. This is a subscription room. If you're interested in checking it out, send me an email, quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to during the pre-market and then live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap are for education purposes only. Please trade your due diligence, your own trade plan, and your own risk metrics. All right, so taking a look at yesterday. Yesterday, it was a trend day up. I didn't trade yesterday. First of all, a couple things. Today is rollover day, but you'll notice that I have not rolled over. That's because I have not been at my computer. I've been dealing with flood issues here, and so I'm going to roll over tonight. But hopefully, knock on wood, everything goes okay, and I don't get mixed data going. But you can see we opened auction in range yesterday, and then we fought that high at 50. And once they broke out, they just basically stair-stepped their way up, okay, and closed above the prior day range. In the Globex, we've had continuation. We opened up inside of the upper distribution of the distribution, multiple distribution, but the thick part of the profile, and then basically came up, rejected the high the first time, came back to the VPOC, went sideways, and then when Europe opened, we blasted off and we went up and we came up and we tested 65. Now remember how important the 65 was when we were trading up in that balance, and we'll take a look at it for a minute. But so far they've come down. They've created a double distribution with a LVN at the prior day range high. That's going to be a key area for us to watch. And right now they're trading in the upper distribution, and we just got a VPOC shift from the lower end to the higher end, and they're trying to take it higher still. So let's just take a look at the news. We did just have news out. We had Canadian GDP came out 0.3 versus expected 0.1. Jobless claims came out better than expected. Expected 237, came out at 236, just a slight beat. Continuing jobs came out slightly better. Continuing jobs claims, and the unemployment rate came out that's not the U.S. Sorry. So most of the news was fairly decent. We've got the Dallas Fed PCE in 6 minutes with central banking reserves. Then in 51 minutes, we've got Chicago PMI. Of course, the big one coming up at 10 o'clock is going to be the pending home sales with natural gas at 10:30. And then that's basically it for the scheduled news. Of course, there's headline news out there right now with everything that's going on with Trump and North Korea. So just always be aware that right now volatility can pick up pretty quickly. I always like to start my day taking a look at a simple candlestick chart to see where we are within the trend. I use a 9 EMA, 20 SMA on all my charts. You can see on the monthly, price is paralleling quite nicely along the 9, nowhere near challenging the trend on the 9 EMA. And we're getting back up into that upper distribution, or trying to. On the weekly, we came down after getting the inside week. We were looking for a move back to test the 9. They actually dipped down to the 20, tested the 20 3 weeks in a row, and then we bounced, and now we're back above the 9 and the 20. That's why I was saying that, don't get your, last week I was saying don't get your short hats on too strongly. We're likely to bounce. We left a lot of repair work above. Going to the daily, you can see that we had started to get a downward trend, and so far this week they've taken that back, and we're above the 9 and the 20, and basically going sideways right now, trying to get back up into that upper distribution. In the intraday, you can see we've got good slope, good separation on the 4-hour. Trend is very strong. We did just leave a naked cross down here at 2440. That's going to be an important area for us, as it has been for a while. Going to the 1-hour, you can see slope and separation to the upside. Trend is pretty strong. I think there's a naked cross, not on the 1-hour. I think it starts on the 30-minute. I know there's a couple up here. There's this one right here up at, we just hit it. It was at 65. So that one got taken out. We've been trending up for the last 3 sessions. We've come down and tested the 9. We're back above, the 20. We're back above the 9. Looks like we're getting a possible continuation pattern. On the 15-minute, basically the same thing. Just got a little bit of a head and shoulder pattern right here. So we're gonna have to watch this here just to see if it gets violated. If we get above the high of 2463, we could violate it. But let's just take a quick look at this. I would put the neckline right here. Some people would draw it lower, but I like to be very conservative. And then our Fibonacci breakout. So this has got a primary target of 2057.50. 2457.50. I'm just writing this down. It's just a little head and shoulder pattern, and if we get above the 63, we're going to violate it. So, but always, if we break below that 60, and I'd be looking at the high of the prior day, I'd be looking at this line right here, 59.79. You got a good target on the head and shoulder. Let's get rid of this drawing tool. Going to the 5-minute. Oh, and I want to look to see if there's a naked cross on the 15-minute. I'm pretty sure there's one. No, we took it out already. Okay. So we got all the naked crosses to the upside. That one's gone too. And this one's gone too. Yeah, okay. Just wanted to make sure they're all gone. So we're kind of creating a bit of a cup and handle here. There's a head and shoulder as well, but we also have a cup and handle. Just watch that 63. Anything above the 63, that head and shoulder is going to be violated anyway. But you can see we're above the 9 and the 20. So again, I'm doing this on the fly because I didn't have time to do my homework pre-session. So things might move a little bit slow as I'm seeing things for the first time. All right, so let's talk about what's happened in the auction, the big picture. We created this balance here. We accepted a breakout and accepted value up at that 41, went into price discovery, accepted price higher at the 57.50, and then they came up and they go sideways. They can't hold value around the 69. They come back to the first time, pick up the late buyers at 57. They come up back into balance, put in the blow off top, try to hold value at this 72. They fall out. They slice through the 57, come down to the next level, down at the 41. They actually come all the way back to the microcomposite VPOC from this balance zone. We bounce, we get back. We cannot get back and hold that value. They reject it at the 72, and we fall back out. What do? We slice right through here, okay, and push down into the value area low of the, so we make a complete trip through value, and then they come up, they accept value here at the 29.75, and then they come up, and we've been chopping around between the two value area of these two distribution zones and filling in the auction here. We came back down again to the 29 area. That's where we accepted value, and then we've been moving our way back up, and now we're coming to a key level that we've gotten above at 60. The next key level is going to be right here that we've rejected, which is the 24.65. That's the value area low. I'm going to actually change the color of this so you can see this, and change this to cyan and just widen it just slightly. So you can see that this value area was rejected overnight, and our high of the prior day is at 60. So this sets up an opportunity, whereas if we gap and go and we get above the 65, we've got a clear shot into that 69, and there's a naked close just below it. I think it's at 67.75 or 68, but that sets up for a nice long into that 69. Or if we reject the 65 and come back down and break below the 60, then you got a nice shot into yesterday's VPOC, which is at 56.50. I'd actually be targeting this 57.75 first, and then the naked close. So you got some nice targets with clear delineation, knowing where you're wrong quickly. So key levels to keep an eye on, obviously 65, 60, and then our LVN overnight corresponds with, our LVN from yesterday corresponds with this 54.50. So that level is determined, and then of course the LVN from overnight is at 59.50, which is one tick below yesterday's high. So really nice levels to trade from. So if we take a look at our inventory overnight is roughly 90% net long, both in time and in price. We're accepting value higher outside of the prior day range and value area. So hold on 1 second. I just gotta, this might be the insurance company. Let me just stop the recording. I'll be back in a minute. It was not. Okay, so taking a look at our levels, obviously we're going to use this 59.50. We're going to use the 65, both as trade areas. It's hard to do anything right here. Our overnight high is that 65. Our overnight low is down at 54.75. We have this LVN at 59.50. We have an LVN here at 54 that goes against the overnight low, so I'm going to be using that as a level. And then we got the VPOC and the naked close. It's not much to lean on up here, but our overnight VPOC is not likely to shift. It might shift to 62.50, but right now it's 61.50. And then once we back our main target, back above 65, our main target is 69 with our intermediate, immediate targets above at 67 and 67.75, the naked VPOC and the naked close. And then once we get into that upper distribution, 72 becomes our first resistance. And then our breakout of value is at 75, and then targeting the prior all-time high that was in July with 76.25 as an immediate target to get funded. All right, and then above that we've got 84.25 LVN, and then our all-time high, of course, is at 88.50. It's going to be slightly different on the. It's going to be slightly different on the December contract, so I'm just looking at September right now. All right, so and then below our daily ATRs, our overnight high right now is at 65. 65 minus the 1905. Our daily downside ATR target, I don't think, yeah, is going to be at 45.75. And our upside daily ATR target off a low overnight of 54.75 is going to be 73.75. I'm just going to use this move. Oh, I want to keep that. It's at 72 level. Okay, so our critical mass, we have one session left to trade. Our month open is 70.50. One daily ATR down is 1905. So our critical mass down is down here at 51, and our daily ATR is below it. So this becomes a key area to watch. If we break below the midpoint and the value area, we're below critical mass, and we could see some capitulation sometime this afternoon and a run down through to the daily ATR target. That's not my main hypothesis, though. We're going to be opening auction out of range, so my main hypothesis is an open auction out of range, seeing responsive sellers coming in, taking us down towards the 59 to 54 area, finding buyers, and then rotating us up back, fight the 65, and push through the 67 and close somewhere up here, possibly getting us into a positive month, but closing back up in the balance that we just fell out of. That is hypo 1. Hypo 2, believe it or not, is going to have equal opportunity in my mind. because they might make a push here first, reject the month open, and then rotate back down and come back down and trade back down here between the 57.75 and 51 and a quarter, and basically just go sideways, creating a 2-day microcomposite VPOC somewhere higher outside of this balance as a balancing day. So that is hypo 2, and it has equal opportunity to hypo 1. Hypo 3, of course, is a gap and go, failure to close the gap and push up into the 65 to 67 chop around there, and then push up into the daily upside ATR target, push towards that July high, and then rotate back and close somewhere in around that 69.70 area, and giving us a bit of a doji month. That is hypo 3. Hypo 4 is sideways consolidation, chopping between 54 and 67 as we fight this high, and basically having a tight 7 and 9 point range, and really not doing much going sideways. Alternatively, my alternative hypo, which I find is a lower probability, but the lower probabilities have certainly been playing themselves out lately, is failure to take out the naked VPOC and naked close, rotate down to critical mass, fight the critical mass between 51 and 54, and then fail and push down and come down and test this 40 area, the value area high from the balance area, and close somewhere in around our 7-day balance, which is down here in the 43 area. So that's my my alternative. Those are all the things that I'm looking at in ES. Looking at the gold chart, we talked about getting. Oh, that's the wrong chart. We talked about getting a counter rotation of $15 to $25 earlier this week. We have done that. We actually got a counter rotation of 29.69. Put a new profile in this balance area, and our balance is 13.12. We've got clear key lines 13.18 and 13.05, but I'm expecting to balance out here again today and get stuck in the wicks from the overnight session so far, and basically just going sideways. But if we break out of 18, you want to target this HVN here at 23. If we break below the 05, you want to be looking for a new low on the day and a push down towards that 1300 and the 1302 as your main target below. But we made a large move. I think we base now, go sideways for a bit, and push on through up into the 1350s, which is our next big area that I'm looking for on gold. So that's going to complete our pre-market session. Sorry I've been off for the last 2 days with everything that's been going on, but we'll get back to normal now, and hopefully have a good day. Remember, you can roll over. Just know that the numbers change, but the levels, the structure doesn't. And I would suggest that you probably roll over tonight or tomorrow coming into next week. All right. Trade well, trade safe, and we'll catch you on the flip side.